Look at Vermilion Energy. Of course, they're an unusual creature among TSX-listed energy stocks because they're so global. They have assets, natural gas in Europe, plenty of production in Western Canada. They've got assets in Australia, for example. So let's see how they've been making out through the pandemic. They would bring a global perspective to this. We are joined now by Curtis Hicks, president at Vermilion Energy. Curtis, thanks so much for coming on the show.
Well, thanks for having me, Andrew. Pleasure to be here.
So one thing jumping out for me here, you did manage to get positive cash flow, 52 cents a share ahead of consensus in the latest quarter. How did you manage to eke out positive cash flow in a horrible period like Q2?
Yes, well, two factors contributed to the positive cash flow. Number one is we have a high margin netback asset base, and so typically it will deliver really strong netbacks. So I wouldn't say they were strong in Q2, but certainly enough to deliver positive cash flow. And secondly, we monetized an interest rate hedge that we had in place and brought in some $25 million of cash flow in Q2 to further enhance our position.
Oh, I see. Yeah, something like 16 cents of the 52 cents in positive cash flow came from the unwinding of the interest rate swap. Just remind us, I mean, we forget what a big company Vermilion is. I mean, just over 100,000 barrels of oil equivalent a day. What happened to your production in the latest quarter? Was it down?
Production in the latest quarter was actually up 3% over Q1. We had a fairly heavily weighted capital program in the first quarter, drilling wells primarily in Canada and in the U.S. A lot of that production was brought on in Q2, and as a result, we were able to increase our production quarter over quarter.
So did you shut in much production in the quarter in any of your operations?
Yes, we had about 3,000 barrels a day was shut in France. It was oil production that we delivered to a refinery that basically had to shut down due to a lack of demand for their product. So we shut that down in March, started bringing it back on in June. You know, over the rest of the portfolio, we had very limited, if any, impact on our production as a result of COVID.
Now, natural gas is a pretty big part of your production base. Maybe you could give us an idea how much it is. And tell us, how are you faring in this current global environment where there's a glut of natural gas?
Oh, yes, well, natural gas represents about 45% of our production, and it's split. We've got about 60% of that gas production is in Western Canada, and about 40% of it is in Europe. You know, the Western Canadian gas price was okay relative to some historical periods. Where we really saw the impact for Vermilion, frankly, was in Europe. You know, European gas prices really saw the same impact as oil prices. You know, whereby there was a significant demand destruction as a result of COVID, and so gas prices fell in Europe. So we're averaging sort of roughly $2.50 to $3 an MCF out of our European production right now. And historically, that's been significantly higher than that. And if you look at strip pricing for 2021-22, it gets back into the $5 to $6 an MCF range. So there was a significant negative impact on our European gas price in the quarter.
Now, your net debt is something like $2 billion, just slightly less. I know Raymond James, just to pick one analyst, has a market perform. They say with leverage levels of 3.3 times debt to EBITDA for 2021, we do expect to see plenty of share price volatility. So you have a fair amount of borrowing on the balance sheet.
We do, and we're not happy about that, Andrew. Our near-term focus for the business will be to reduce our leverage, and that might be at the expense of top-line production growth. We're going to focus on reducing debt, profitable production, and really capital discipline here in the near term. And then as we move forward, we'd like to revisit a cash return to our shareholders and perhaps re-implement a dividend somewhat more modest than what it was historically, and perhaps combine that with a share buyback if it's appropriate in the marketplace.
Yeah, but of course your dividend, famously, your yield was high for a long time. Previous management, the board, stuck with that, and now it has subsequently been cut to zero. When would you, have you any timetable as to when you would like to hope to get the dividend back?
We do not have a timetable, and frankly, it's highly dependent on commodity prices. We need some strengthening in commodity prices in order to generate sufficient free cash flow to make some meaningful impact on debt reduction. We have some internal targets that we want to get to in terms of debt reduction. We don't have to get all the way there before we revisit a potential dividend, but we do want to make some meaningful progress, and we want to be confident in the environment that we're working in, that by implementing a dividend again, that we won't have to suspend it, sort of in the short term.
No. Now, just remind us, you're the president. Tony Marino and the company have parted ways now, the previous CEO. So what is your management structure now?
Yes, that's correct. We do not have a CEO. What we did in terms of the management changes is we brought back Lorenzo Donadeo. Lorenzo is a founder of Vermilion, previous CEO. So he came back as executive chairman. I was brought in as president, and we struck an executive committee made up of a number of senior executives. And that executive committee will effectively act as our CEO and make the strategic decisions necessary on behalf of Vermilion. So we want to take a collaborative approach to decision making as we move forward. And this is a structure that we used under Lorenzo's tenure as CEO, and we felt it underpinned a period of very successful growth. And it was fundamental to our success at the time, and so we think it's an effective tool to have going forward.
Have you and other executives been buying shares in Vermilion lately?
I do not know about the others, to be honest with you, Andrew. I have not been buying shares. I do have a position in Vermilion, but I have not been buying recently.
Would you consider doing that as a signal of confidence in the company?
Certainly, we have lots of confidence in the company. I guess I have to look at my personal portfolio and the implications of owning more of Vermilion. Not afraid to be a Vermilion shareholder. I have been for a long time at various different levels. So that's something that I'll have to consider going forward.
Curtis, thanks very much indeed for joining us today.
Well, thanks for having me, Andrew. It's my pleasure.
Curtis Hicks, president at Vermilion Energy.